In this video, I'll be reviewing federal student loans versus private student loans. So let's get started. Now, first of all, we're going to be looking at the similarities between them. So, similarities. All right. So, the first similarity that we have is purpose of the loan. So, purpose of loan. Now, both federal and private student loans are designed to cover educational expenses such as tuition, room and board, books, and other school-related costs. They aim to make higher education accessible by filling the financial gap for students. Then we have repayment obligation. So, repayment obligation. Now, regardless of the loan type, borrowers must repay the loan with interest. Both federal and private loans have specific repayment terms, and failure to repay can lead to severe financial consequences, including damage to credit scores and legal action. Then we have loan disbursement. So, loan disbursement. So, for both federal and private loans, funds are generally disbursed directly to the educational institution to cover tuition and fees. Any remaining funds are sent to the student for other educational expenses. Then we have interest accrual. So, interest accrual. Okay, so accrual. Now, interest accrues on both federal and private loans. Depending on the type of loan, interest may begin accruing while the borrower is still in school or during grace periods. Then we have availability of multiple loan options. So, multiple loan options. Now, both federal and private loans offer various types of loans tailored to different needs. So for federal, they have subsidized, unsubsidized, plus loans, and etc. For private, loans for undergraduates, graduates, refinancing options, and loans for specific programs like medical or law school. Then we have loan limits. So loan limits. Now, both loan types have borrowing limits. For federal loans have annual and aggregate limits based on the type of loan and the borrower's academic level. Now, private loans limits are determined by the lender and can often cover up to 100% of the cost of attendance, though they may impose minimum and maximum borrowing threshold. Then we have repayment begins after school. So, I'm just gonna write it here. Repayment begins after school. So for both types, repayment typically begins after the borrower leaves school or drops below half-time enrollment. Federal loans offer a grace period, while many private lenders also provide some form of deferment or grace period. Then we have credit impact. Credit impact. So both federal and private loans impact the borrower's credit history. Timely payments help build a positive credit record, while missed payments can harm credit scores. Then we have loan refinancing. Loan refinancing. So both federal and private loans can be refinanced through private lenders. Refinancing can consolidate multiple loans into one with potentially lower interest rates, depending on the borrower's creditworthiness and market conditions. So that is it for the similarities. Now we're gonna go ahead and look at the differences. So let me just go ahead and clear the screen and write differences. All right. So the first difference that we have is source of funding. So source of funding. Now for federal student loans, it's issued by the US Department of Education and funded by the federal government. For private student loans, it's provided by private lenders such as banks, credit unions, and online financial institutions. Then we have eligibility criteria. So, eligibility criteria. Now, for federal student loans, it's determined through the FAFSA. So, financial need, cost of attendance, and enrollment status play a significant role. Credit checks are generally not required except for plus loans. For private student loans, it's based on the borrower's credit history and income. A cosigner is often needed for students with limited credit history. Then we have interest rates. So, interest rates. So for federal student loans, fixed rates set annually by Congress, and rates are the same for all borrowers within the same loan type and academic year. For private student loans, rates can be fixed or variable depending on the borrower's creditworthiness and market conditions, and borrowers with strong credit may get lower rates than those offered by federal loans. Then we have repayment terms and options. Repayment terms and options. So, for federal student loans, it offers multiple repayment plans, including income-driven repayment plan. Options like deferment and forbearance are widely available. For private student loans, repayment terms vary by lender. Some offer flexible repayment options and deferments, but these are generally less comprehensive than federal loan options. Then we have loan forgiveness and discharge. So, loan forgiveness and discharge. So, for federal student loans eligible for programs like public service loan forgiveness and teacher loan forgiveness, certain federal loans can be discharged until specific conditions like total and permanent disability or school closure. For private student loans, it rarely offers forgiveness or discharge options. Some lenders may forgive loans in the case of death or permanent disability, but this is not guaranteed. Then we have cosigner requirement. Cosigner requirement. So for federal student loans, it typically does not require a cosigner except for plus loans with adverse credit history. For private student loans, it often requires a cosigner, especially for students with limited history. The cosigner remains responsible for the loan if the borrower defaults. The next difference that we have is application process. So application process. So for federal student loans, it requires the FAFSA to determine the eligibility for federal aid, including loans, grants, and work study. For private student loans, it requires a separate application through the lender, which includes a credit check and may need additional documentation. Then we have loan limits. Loan limits. So for federal student loans, they have annual and aggregate limits based on the borrower's year in school and dependency status. For private student loans, limits vary by lender and can often cover up to 100% of the cost of attendance with specific borrowing threshold set by the lender. And lastly, we have loan forgiveness program. So, loan forgiveness program. So for federal student loans, it offers several forgiveness programs for borrowers working in public service, education, and other eligible fields. For private student loans, they generally do not offer loan forgiveness, though some lenders may offer hardship assistance or temporary payment relief. So that is it for the differences as well. So alright guys, that's basically it on federal student loans versus private student loans. We've gone ahead and looked at the similarities and the differences, and I hope that this video has helped you out, and I'll be seeing you guys next time. Peace out.